In my last video, I shared the predictions from Shark Tank star Barbara Corcoran that when the mortgage interest rates will decline, the home prices may jump by as much as 15%. These are nationwide predictions, but real estate is local. If you are shopping for a house, you're not buying an average home in an average city, in an average state, or a median house. You're looking for a specific home in a community you want to live in, often only a few blocks area, a place you will call home that is close to shops, restaurants, schools, easy for work commute, place to enjoy, have friends and family over, and relax. For many of us, buying a home is a major investment, especially in the Bay Area, which is one of the most expensive places in the country. When you make your decision to buy or not to buy, when to buy, and which house to put an offer for, you need to consider many factors. One of these factors is the rate of appreciation, a potential for growth. We tell our clients that the Bay Area is not a cash flow market, it is an equity market. The way to make money in real estate here is to hold properties for as long as possible while home prices are going up. In this video, I'm going to review the differences between multiple local markets and what is their potential to continue to grow. I looked at the median single-family home sale price changes over the 10-year period between 2012 and 2022. 2022 being the last year when we have full year of data for. Check this table, comparing Santa Clara, San Mateo, Alameda, and Contra Costa counties. At first glance, there is no much difference in the rate of growth. The fastest growing was Alameda County and 185% over the 10-year period. The slowest was San Mateo County and 166%. If you consider that median home selling price in San Mateo County in 2022 was $1,905,000, the highest of these four counties, it starts to make sense. San Mateo County homes are pushing the limits of affordability, and it is detracting potential buyers. With less competition for homes, there was less home value appreciation. But if you look at the city level, the difference in the property value growth is insurmountable. Consider the case of two neighboring cities separated by a county line, Palo Alto and East Palo Alto. Over the last 10 years, East Palo Alto home values increased by 233%, while Palo Alto home values increased only by 97%. So, if in 2012 you would be able to buy 6 East Palo Alto homes for the price of one Palo Alto home, in 2022 you would be able to buy only 3. In the dollar amount, median Palo Alto home grew by almost $1.9 million, while median East Palo Alto home grew by a little less than $800,000. What explains this dramatic difference? First of all, it is the reputation of both cities. Palo Alto is a very prestigious place to live in. The name always was associated with Stanford University, startup culture, and innovation. It is the birthplace of companies like HP, location of the Xerox Park, and of the first Google office. Strong employment base provided much-needed resources for city services. Palo Alto School District is known worldwide and is a magnet for parents who want the best education for their children. For a long time, Palo Alto was one of the most expensive cities, and with fewer people being able to afford to compete for the homes here, the price growth was much slower than in most other cities. East Palo Alto, on the other hand, was incorporated very late, in 1983, and prior to that time was relying on the San Mateo County resources for the needs of its residents. City got a huge boost when Facebook, now Meta, and Google located their headquarters on the east side of 101, close to the city borders. Now East Palo Alto attracts young tech workers who like the easy commute, proximity to lively downtowns in Palo Alto, Menlo Park, and Mountain View, and the affordability of housing. Where else on Peninsula you can buy a single-family home for around $1 million, give or take? Generally, what we see here in the Bay Area is that as the housing deficit became more critical and housing prices grew, fewer people were able to afford homes in the top-tier cities. These consumers spilled over in the surrounding areas and contributed to the home value growth there. As Palo Alto and Los Altos became too expensive for many Bay Area residents, surrounding cities got a nice value boost. Mountain View grew by 132%, Cupertino by 136%, Sunnyvale by 160%, and Santa Clara by 172%. All these cities also benefited from the fast growth of tech sector in the area, including the new Apple Park campus built on the border of Cupertino, Sunnyvale, and Santa Clara. COVID and shift towards remote work brought new attention to the areas that were too out of range for easy access to the Bay Area jobs. 3 cities in the Contra Costa County, Dublin, San Ramon, and Pleasanton, grew by 166%, 143%, and 137% respectively. These communities have more new construction than it is typical on the peninsula, larger and more affordable homes, and are known for good schools. This area got a significant value surge in 2021-2022 when many companies allowed their workers to come to the office only 2 or 3 times a week or work from home full-time. 3 East Bay cities benefited the most from the proximity to the commute routes to the major Bay Area employers and from relative affordability compared to most places on the peninsula. Newark, a city on the east side of the Dumbarton Bridge, grew by 225%. Its north neighbor, Union City, grew by 208%. Fremont home values increased by 160%, actually the same as Sunnyvale. When you're thinking about buying or selling a home or investing in real estate, you need an experienced local realtor who can help you analyze not just the condition of the house, but also local market conditions, potential for home value growth with and without any major home improvements or additions. Finding a good home in an underappreciated part of town will help you take advantage of its deferred growth potential. That is exactly what we consider when we are working with our clients. Call the number in the description of this video to schedule a short meeting with me to discuss your house hunting plans. This is Michael Tallis with the Tallis team. With major developments happening daily, if not hourly, it is critical to monitor and report on all the latest trends in the real estate industry. This is exactly what I will be doing. If you found this video useful, subscribe to our channel, support us by clicking on the like button, and please share this video with your friends who also may benefit from it. Till next time.